It's now crunch time, and two big news stories just dropped. First, Tesla announced the Robotaxi launch in June at Austin is a go. Great news for Tesla investors. Second, President Trump just announced a 25% tariff on all cars not made in the United States. We'll show you which car companies are in deep trouble and how exactly Tesla might be impacted. We've got the bulls here with us today. We got Tesla boomer mama, the queen, Alexandra Mertz. You got Jeff Lutz, also known as Mr. Incredible, the rational bull. And joining us this week, we got Matt Smith, the financial bull. Appreciate everybody joining us today. You need Matt. We need the financial smarts here to tell us what's going to happen in Q1. It's upcoming next month. We need Jeff. We've got the tariffs. Lots of very important information Jeff's going to share with you today about which car manufacturers are going to struggle, how Tesla's going to be affected. And we need Alexandra always, but today we need her to tell us what's going on with this big, giant news announcement that we just had. Tesla confirmed the Robotaxi is actually going to be launched this June. They posted this on their X account. The future is autonomous, and it starts in Austin this June. Thanks to Austin City, Texas Department of Transportation for hosting and supporting our efforts to unlock safe, low-cost, premium, point-to-point electric transport. Very interesting choice of words there. They shared these photos. It was just a symposium. They didn't actually get any permits. They didn't announce that. But you've got people like Eric, who is the actual lead for Tesla in Robotaxi. He said, exciting day, talking about Robotaxi with critical operational stakeholders. Thanks again to officials at Austin Transportation and Texas DOT. He is the principal engineer. And you got other Tesla executives. Ryan Torres says, hi to anyone that doubted us. Launching Cybercab starts this June, thanks to the city and Texas Transportation. Jose Del Coro, still doubting that this is happening in June. Looks like that there's a lot of confidence from the Tesla team. How did you take that, Alexandra?
Not only confidence, this is certitude. I mean, if you look at the choice of words, it doesn't say will start or may start, it starts. You have all these executives thanking both the city of Austin and the Department of Transportation of Texas. So this happens. This is in the bag. This is decided. They may have to, wait for the last stamp to be on the last document to give us the document itself, but this is starting. Now, does it start on the 1st of June? Does it start middle of June? Does it start end of June? Who knows? But it's latest in 3 months. This is just absolutely exciting. We have been waiting for this moment for years. And somehow, because the wait time is always so long, when the moment finally comes, people are not even that excited about it anymore. Well, that's stupid. Here we really should be excited. This is the beginning of a rollout, of a first city rollout in Austin, then a Texas rollout, then a California rollout, then a nationwide US rollout. And at the same time, in the meantime, we may get in May the good news on FSD in Europe. So you just have this feeling we're finally merging all these different initiatives coming together, and it's going to happen in the next 3 months. It's mind-boggling. I'm really excited about it. And then don't forget, I do believe we'll have the shareholder meetings mid-June. There is a rhythm to this. If you have the shareholder meeting at a certain date last year, you have to have it latest at around the same date this year. It could be earlier. So last year, what happened, remember, they had to delay it. We usually had it in May. Now we got to June because of that independent committee that had to decide whether we go to Texas or not. Fair enough, we are in Texas now, but just explaining why we moved to June. So this year is very likely to be in June as well. So can you just imagine? I'm certain now we will have the shareholder meeting again at Giga Austin. And can you just imagine if we could just all right there in an autonomous vehicle, right from our hotels to the Gigafactory? I mean, how fabulous would that be?
We're going to videotape that, Alexandra. I'll be right beside you. You're the queen, right? So I'm going to I don't even have to open the door for you. The doors will just open on her.
Herbert, I have to tell that story. That was so funny. So last year, remember, with the shareholder vote and this whole thing, and we had this banner. I was in the same hotel then Jeff. Remember, Jeff? I mean, this is gonna be a memory forever. And I had ordered this banner that we then all signed. You all know what it is. But there we are in a cheap Hilton on a busy street in Austin and have to get from there to the Gigafactory. And I was like, oh, what Uber or Lyft do we have to order to get this whole thing in? And then the evening before in a bar, somebody said, oh, have a Cybertruck, I'll pick you up. Now, remember, that was the very early deliveries of Cybertrucks. So this man that we didn't know up to then picked us up in the morning. We came with our boxes and a whole thing, and we're in that Cybertruck. I mean, we felt like, Cinderella in just the horses, everything was there. And then we drove to the Gigafactory, and closer you got, more it was a line lined up to get us in there. And we were like, oh my God, we'll never make it. It was such, a huge line, and time was ticking. And then I put the window down. So the guys went, Alexandra, show your face, show your face, show your face. I put the window down, and they was, oh, that's Tesla Boomer Mama. And so they let us go through. They let us pass everybody with our package. I said, yeah, we have this thing to deliver. They let us drive up to the entrance. There were people waiting there for us who unloaded it and put it inside of the Gigafactory entry hall, drove us back, but let us skip the whole line so we could go through security. Back we went through security, came back in. It was already mounted. Everything was there. I mean, it was such a fabulous moment, Jeff. Remember?
Yeah, it was. It was amazing because the lines are super long. It was just good to be able to get through it and get that important sign in there. And yeah, it was just in the last 24 hours, we knew the vote had passed. So that was it was a little bit of a, euphoric because you didn't know what was going to happen the day before. So all that kind of happening together it was a great day.
Yep. Don't mess with Tesla retail investors. That was a big moment because, again, we needed like these milestones. We have one coming up in June. Matt, I wanted to ask you, what happens in June? Tesla comes out, says, here's a Robotaxi plan. Here's the price. Here's how many cars. Here's our program that we're going to offer. They might not share the whole program quite yet, but they'll tell you what's happening. What do institutional analysts do? What will you do with your forecasts?
Well, I think my forecast is going to remain unchanged. I did put out a post maybe a month, maybe 2 months ago, basically saying I'd always had robotaxis as like an upside scenario where, I would do a base case valuation with FSD as like a nice ADAS system, and you assume some upside on take rates. But then I had a separate valuation, which was more of a bull case, which incorporated robotaxi network and Optimus selling that and all the kind of crazy economics of that. So I think my forecast is going to remain unchanged because I'm already taking this into account. But I think it's probably the case that most analysts have not. I think a lot of them have like PTSD from Elon talking about launching a robotaxi network, in the next 12 months for each of the last, 6 years or so, however long it's been. So I think we still are in a little bit of this, I'll believe it when I see it kind of mindset. I think those of us who are driving V13 actually understand that it is more or less good enough to actually achieve this level. But I think there still is a lot of institutional skepticism. So if they actually do launch it and you can go and try a ride and they basically say, yeah, this is just essentially what's available on all cars on, like Tesla FSD, it's very easy at that point to say, okay, here's the unit economics in Austin, and then extrapolate, okay, how many more cities will they add by the end of 2025? When will they get nationwide in North America? And then what is the nationwide in North America? That's not exactly accurate. Nationwide in the US. And then I think from there, like once you actually have some economics that you can model that are based on actual things that you can see, it's going to be, I think, unreasonable not to include some assumptions on those economics and what it's going to mean for earnings per share and all the rest for all the analysts. So I think you're going to see some pretty significant price target increases, earnings upgrades, that sort of thing. Once the analysts actually have complete confidence that this is like an ironclad yes, and you can actually go and ride them, and it's real money that Tesla's going to be raking in. So I'm really excited about it. But I think that's one of the advantages we have in the cyber bulls community here is that we've been thinking about this stuff for a long time and modeling it out well in advance, I think, of where Wall Street is.
Okay, well, tell me if I'm wrong, Matt, but I'm a little more pessimistic about it. You got people like Tom Narayan, who does model out Robotaxi today, but then he'll say 2040, lots of competition. And, the price increase will be very, very minimal. Do you think that you'll actually see a jump in the price target because of this launching out?
Yeah, I think you will. I mean, I've heard lots of people saying stuff about how like, oh, GM partnered with NVIDIA, so everyone's going to be a fast follower. And I'm like, okay, first of all, let's look at GM's stellar history of partnerships, with the likes of Nikola and, a few others that are like, I don't think you want to necessarily look at GM's decisions here. Oh, and Cruise, obviously, as being like they're on the cutting edge and will, have it all figured out. But what really matters, and I've said this many times, I think we all understand it here, is that like, sure, like the autonomy piece is a really big portion of it. And I think Tesla's approach here using vision only, like that's highly differentiated and valuable. But ultimately what this whole market is going to be based off is the cost per mile. And that takes into account the capital cost. So how low cost can you build your EVs? Nobody beats Tesla on that metric. Then another one is drivetrain efficiency. So how much electricity does it take to use your entire, not only move the car, but to do all the to power the computer on board. Nobody competes with Tesla on how low power the whole autonomy system is. And so all those things factor into the overall cost per mile. I think that Tesla is going to be able to demonstrate being significantly lower than what anyone else partnering with anyone else on the AI front. Like you're going to be marrying a couple different pieces of technology, and while I do believe there will be competition, I don't think anyone's going to be able to compete with Tesla on price. And what that means is Tesla's going to have the largest market share and or the best margins once they get this up and running.
Yeah, thank you, Matt. We're about to get into the next big segment where the auto industry is a big shakeup there with the 25% tariff. We'll get Jeff to explain to us. In the meantime, Jeff, you and I were just in a space 2 days ago, and we were saying, what is the next thing that needs to happen to prove to us that Tesla is going to launch the Robotaxi in June? And you were saying that, yeah, we need to hear some sort of permit. We got it. We didn't hear the permit exactly, but again, it's the confidence that this is actually happening. What else are you expecting now from now till June?
Yeah, I think that was a big show of confidence. That was signal to the market. If people don't pick up on it, that's honestly up to them. The event was hosted by the Department of Transportation in Texas and in the Austin area. So that was an event hosted by them, and you saw the engineers from the team posting about it with certainty, as Alexander said, for June. So you do with it what you may. That to me, that's the beginning of the ramp up of the whole process. You're going to have this existing set of already deployed capital that's already out there. Many of these other companies still have to spend massive amounts of money to deploy massive amounts of capital and hardware. Tesla already has it out there, and they already have it out there at great gross margins. And now you're going to take those gross margins and you're going to put rocket fuel under it if based on the ramp rate of the actual service. So now what we want to see, we haven't seen a release from a major release line from Tesla since 13.2 was pushed between Thanksgiving and Christmas, and so they've been obviously building a model, and they've been improving upon what we have today, and they're refining another model. I'm sure they're testing what they believe is the candidate release for June, or maybe one release before that, and we're about to see something. I would think in the next couple of weeks we'll see something from them. If it's something interim, it's probably something interim. And the Tesla team, again, is many, many weeks ahead in terms of running training and looking at information. So they have a dashboard of information inside of the company. They have intermediate test apparatuses. They have system tests, internal apparatus. They have internal testing, unit tests that they do. They have things that run edge cases and really pound on the software. And so they've seen this relative, and they have these relative improvement points internally. And of course, then they have the actual fleet deployed where you've got billions of miles, you've got hundreds of thousands of users, and now you've got it open to multiple regions. So the data set is expanding. And it's not only the data set for making the model better, but it's also the data set for assessing the robustness of what's out there right now. So they have great confidence in what they're doing, and they can see many months ahead. I think those are the takeaways I think people should understand. So in terms of data points, it would be great for us as users to get another release and to see the relative improvements, see these final features get added, Cybertrucks can back out of spaces. Just some of these final features that still aren't integrated but would be needed for a full Robotaxi experience. So I think we're, a couple of releases between now and then, but I'm sure Tesla has it, has visibility to it internally right now. So, and again, the capital's deployed. The ramp is this is a much different economic model, and the magnet's going to be, as Matt said, that cost per mile. It's going to be so dramatically different and so dramatically meaningful. It's when it's deployed, when it's running at its peak performance, you're going to see a fairly big impact, I believe. But we've got time between now and then. And then people always link this with cybercab, like we don't need cybercabs to do this. We have Model Ys, Model 3s. We have cars out already. The cybercab is going to be a purpose-built vehicle to really take this to the next level. But we already have the capital deployed. So yeah, this is exciting. This is real signal coming from Tesla, coming from the Department of Transportation.
Exactly.
And we also had we had some level of permitting out of California. This is happening.
Yeah. Can you imagine if you see the maybe 100 cybercabs or whatever, 40 plus, then you have, do you guys think, wireless chargers at least one or two places? And do you think that they might actually have some sort of, service center already with the automated cleaning, or that will come much, much later?
No, I mean, at scale, they'll have it, but I think they'll have prototypes of it running.
Yeah, they're ready. And actually we saw, remember we saw that bot cleaning the car and all that. That's not just gadgets, that's getting ready for it.
Yeah, I mean, I think you want to prototype the entire ecosystem because you'll probably realize, okay, there's some aspect of the cleaning that doesn't work as well. And so then on the next generation, like the point isn't to lower the cost per mile in Austin. The point is to figure out what is the best possible design of the entire infrastructure going forward. So when you actually do get to mass market, then, that cost per mile is as low as it possibly can be. Yeah. So I think that's what they're doing.
I mean, 20 cents per mile is a huge target, right? This is we're not there yet, but to get to that point, it's gonna be quite a job, and not only for the car, for everything, the whole infrastructure. Where are the cars? What are they doing overnight? When are they cleaned? When are they charged? At what level? I think, and they'll be good at that because they're the best at data. But it's gonna take a while.
No, the full program. Once we see the full program, that's what's big difference here, because it's going to be very different than Uber's, Lyft scenario or Waymo, what they're doing. This is completely different. We'll see. If that's the case, they're going to separate themselves, clearly.
Herbert, before you move to the next subject, I want to show a question which I think is very interesting. And I had that question a couple of times on X as well, which is this one. If Delaware's decision on Elon's pay is upheld, will Tesla have to restate all prior earnings, tax consequences? So what happened between 2018 and 2022 is that accounting-wise, 2.3 billion were set aside, and that covered the whole 12 milestones and the potential payout starting in 2028, right? There would be tax consequences for Elon in 2028, so I don't know how they're going to handle that. But let's just say for a moment, we would win the appeal, nothing would change. If we lose the appeal, then actually Elon would have to, then first step could be maybe they go to the federal Supreme Court. Maybe the federal Supreme Court accepts to hear it. Who knows? So that is already the first thing we don't know. If they don't, well, let's just say it's lost. Then the 2.3 billion actually go back so they have to get, recredited. That doesn't mean they have to rewrite all prior earnings. It would go into the next earnings at that moment. So I don't think this would happen first of all, I don't think we lose. My gut feeling is we're going to win. I think there is so much hanging there for Delaware as a state. I'm just not even talking about Elon and as Tesla. I think there's a very high chance we're going to win this because Delaware is so afraid of two things. One, Many other companies moving out of Delaware to Texas or Nevada, and there are lots of good reasons currently to go to Texas. And the second one, which is even bigger, and they actually pronounced that in the Tuesday hearing when they discussed this one Senate bill that just got through, which is that there would be a federal way of incorporating a company. At the moment, you have to choose to go in one of those 50 states, and then you have that jurisdiction. But there could be, from one day to the next, a law that would say, okay, you can now incorporate federally, and then you have to do it to the feds courts, and lots of people would prefer that. So, well, it's not tranched, but Delaware really, is fighting for survival here, and the danger comes from a couple of sides. So I think we will win that appeal. But let's just say we lose it, and we lose it. We can't get to the federal Supreme Court. Then the 2.3 billion would be recredited. So that would be immediately actually a gain, right, for Tesla shareholders. But then we would have, and obviously now we're a Texas company, then we would have to find another way of remunerating Elon. And there are a couple of scenarios out there. One scenario that Larry brought up last week and that I've been thinking about and I still have not come to a conclusion, but would be really great, is if we could use that second vote of last year, June, and say, well, we voted now twice on it. We don't need to re-vote for it. We've got it now, Texas implemented. So if that is doable, again, I'm not a lawyer. I don't know whether that is. That may bring it just back to the same 2.3 billion. And then, it's just a zero game in terms of accounting. If that doesn't work, then we have to do a new options package. And we may have to think about Class B shares, which are possible now that we're a Texas incorporation. So if that is all doable, there are other ways, but they would cost us more money. And I mean, again, there's so many ifs that I can't really prognostize yet, but I don't think we have to reinstate all earnings from 2022 to now. I think it will just go into one flush into the December or March earnings of 2025 or 2026. It's my best answer now. It's all guessing.
Perfect. Yeah. And you've said also that our appeals we won't hear anything until the end of closer to the end of the year.
So yes. So Tesla put the briefs out. The amicus went out. Thanks to all that helped again. Lots of other amicus actually came. One of the professors, including Professor Anderson, and another one of the Chamber of Commerce, both excellent amicus as well. So now we have the 3 Tesla briefs and the 3 amicus. Now we're waiting for the briefs of the plaintiffs, so the Tonetta's attorneys. They're coming in a couple of weeks. Then there's going to be a hearing, probably August, September. And then there's going to be a verdict November, December.
Gotcha. Okay. Thank you for keeping us updated. You're always brand new information. This time I hadn't known about. Thank you for that, Alexandra.
Sure.
Okay. So one of the next big thing that happened just yesterday is the announcement by Trump that he's imposing 25% tariff on all cars not made in the United States. Possibly Tesla could benefit, and then we'll know exactly what this means. Let's watch what he's saying here.
On all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff. We start off with a 2.5% base, which is what we were at, and we go to 25%. And basically, as you know, and as you've been seeing, not reporting as accurately as it should be reported because it's a massive story. Business is coming back to the United States so that they...
Okay, that's all I've got there. But you also have Elon replying to that, saying, to be clear, this will affect the price of parts in Tesla cars that come from other countries. The cost impact is not trivial. You got articles now writing things like tariffs could give Tesla and Musk a leg up on rivals. But Elon continues to kind of reiterate that it's important to note that Tesla is not unscathed here. The tariff impact on Tesla is still significant. So if we take a look at the actual breakdown between cars made, where are cars sold in America? Well, where are they made? You got Tesla's 100%. And this, according to this visual capitalist, you got Ford where you've got 77% is made in the US, 21% in Canada and Mexico. And you can see here, the rest are much lower in the US. It's hard for people to understand that Stellantis and GM is like 50% of the cars are made in America. All the others are much less. Sawyer put a post explaining what's happening here. The tariff will go into effect on April 2nd. About 40% of all new cars sold in the US are imported. So this tariff is a big deal for the imports. That's a big deal. That's a straight tariff on those cars. Won't go through the breakdown. I think I just showed you that slide here. Legacy automakers will struggle to adapt quickly, leading to a significant decline in profits. The US is the most profitable country for the auto industry. This is a big deal. This is a massive big deal for automakers. Trump said this new tariff will be permanent. So it'll be interesting to see how this plays out and whether or not the tariff sticks around or not. Lars Morvey, senior executive at Tesla, said this is true in all major markets. Tesla has for a long time tried to build the car where it will be sold. Hard to be true always, but also can't accept not trying. It just makes sense from an environmental standpoint. Jeff, you said this is extremely difficult to do, but best practice in terms of network design. Great job by you and the supply chain team. And Lars replied to you saying, supply chain at Tesla's next level, Jeff. You pointed you out specifically. And then you pointed this table out as well. Jeff, can you explain to us what's actually happening?
Let's get into it. Yeah. So what's happening here, this is, I would say, the biggest impact to the auto industry since the great financial crisis. And that's not being hyperbolic at all. This is greater than COVID. This is greater than any kind of slowdowns that we've seen, or minor pocket size recessions. This is a big deal. Now it's happening in two parts. The first part, if the first part were to happen in isolation, it'd be a very big deal, which is car imports on April 3rd, 25% minimum tariff on all countries outside of the U.S. stacks on top of it existing tariffs. That's a big enough deal. But if you listen to the president's press conference, that's what you thought was happening. But when you actually read the tariff text and what they actually wrote, it's imported vehicles on April 3rd, and then it's auto parts on May 3rd. So if I were to project, first off, you have to put yourself now in the boardroom of these automakers. And if I were to start grouping them, and if you put them in, the least impact on a pedestal, going to be fine. There's going to be some impact, and we'll talk about it in a minute. I'd put Tesla Rivian there. I'm not talking about, the 3,000 Lucids made. Who knows what's happening with Lucid, but just put Tesla Rivian there for now. They're in good shape. They're going to have issues. We'll talk about it in a minute. And then if you had a second bucket, I'd probably put Ford by itself. Ford's going to be impacted. 20% of your product coming from outside of the country is not insignificant. They're going to be impacted. There's going to be entire models impacted, and there's going to be supply chain impact and gross margin impacts for them. So, but I would put them in a second bucket. Now, when you start getting more severe, call it medium high. I would call it medium high severity. You have GM and Stellantis. These companies are at 40, 50% at the automobile level, at the finished goods level. And then, and this is where if you were to put a bucket that's just out of this world, then you've got the VWs, the Mazda, the Subarus, the Hyundais. They're in real trouble. Okay. And to move these, if you're moving out, there's many portions that we're just talking about the finished goods right now. Some of the economics don't work. You can't just, let's say there's existing space in a U.S. factory, and let's even say that you've got a lot of common tooling, like you've got the same body, and you've got a hybrid version in Mexico, and you've got a ICE version in the U.S. You want to move the hybrid version out of Mexico, and you got the same tooling. You still have economics issues, because now you're taking the hybrid with two powertrains, you're moving it in the U.S. where you have much higher, you're going from $2 to $10 an hour labor cost in Mexico. And I'll get to that in a minute, because there's a lot of inaccuracies in terms of like what really happens with USMCA labor wage rates. And you're moving that to the US, you just immediately bust the unit economics. So these companies are going to actually have to reinvent what they do. They're going to have to pare down their model size. We're not even talking about the parts yet. They have to pare down their model size, their number of models, and figure out what they can do in this if I'm in the boardroom right now with them, it's like, okay, we have to frame this issue. What's going on? What's the economic impact to our business starting April 4th, and do a daily crawl on that. That's, if I'm in that's what I'm asking for, to start projecting on April 3rd and April 4th. What's the daily crawl? And then you've got to frame it up and say, all right, if we're going to do this phase 1 on April 3rd, and we're going to do this next phase on May 3rd, you have to assume That's what the president, like, we have to assume that we're going to put it on auto parts. And if they're going to do that, then you have to frame that up as well. Then you have to have one complete package at the board level, at the C-suite level, and then you got to go public. You have to come out to the public, and you have to come out and you actually have to guide in terms of what this does to your business. You cannot wait till earnings for something. If this was a 5% tariff or this was something isolated, I think you could just put a statement out to saying we're impacted, but we're managing it. This is so big that you probably have to come out and actually make some sort of interim statement in your quarter. You have to go public. And then you get back, then you're in the planning phase while you do this. And you say, okay, now what do I do with my business? Do I restructure it? Is it just purely product moves? What products get killed? What products get redesigned? And then that's kind of part of that whole package that you have. And it's like, look, this is the way we're doing business going forward. We're in like day, whatever, 65 or 70 of this presidency. This is going to go on for a bit. And then you can do scenario planning. You can say between, the April 3rd announcement and the May 3rd, which now will include auto parts. Now let's get to that. And you could say, well, what if we don't do the May 3rd thing? What if that gets pulled off? Well, then I think it's an impact, but I think it's more manageable. But just rest assured, if you put that chart up, Herbert, with the flags on it, that 54% insourced, and that is actually deceiving, because that is number of vehicles. Now, if you start getting into the value add of work, and what is the value add of work? That is the capital and labor efficiency, labor input involved to transform a bucket of thousands of parts into a completed vehicle. And when you start doing it by part value and you start doing it by transformation percentage, that 54% is actually much lower in the US. We're actually not doing a lot of auto work in the US. Over the years, we've gone from, we basically, as we, with the USMCA and with the prior trade agreement with NAFTA, with Mexico, that really allowed, what we ended up doing in the United States is taking the high labor content items, the ones that have the most amount of people, labor, manual labor, and even the most amount of CapEx too. We moved that down to Mexico. And that's what's happened. So that's why you have the motors, the transmission. So we may do the frames here for like the engine or the transmission, but then we're actually doing the actual assembly and all the labor at that $2 to $10 an hour labor rate in Mexico. And the USMCA says it's got to be a minimum of $16 an hour. And I'm sure that there is some labor in Mexico that's running at $16 an hour to check that box. But if you go into those factories, they're subconning a lot of that work out to other subcons in Mexico for the $2 to $10 an hour. So this is how they've designed their cars. This is how their unit economics are built up. These are multiple years in the making. The USMCA was, I think, instantiated, around 2020. It's up for renegotiation in 2026. The way I would have handled this maybe a little bit differently is I would have gone and said, let's accelerate the renegotiation of the USMCA and let's get everything in there that we need to protect the U.S. auto industry. And I would have put the car imports on a schedule, meaning like this is going to 25% over this schedule. You better figure out how to move your cars here. And I would have put the parts on a schedule. To do April 3rd and May 3rd, I actually think it's going to be economic calamity. Especially with the May 3rd announcement. So let's see if we get to that. What else?
Is it just positioning, Jeff, then? This is just negotiation tactic? I mean, you don't say it's April 3rd. Like that's like a few months from now, a few days from now. That means that they don't expect them to make, even if it's months, these automakers are not able to shut down factories, retool, all that. It's going to take years. So what's going on?
April 3rd, I think, is going to happen. And I think what you're going to have there is you're going to have inventory built up prior to that. You're going to have cars flowing over the border. You're going to have Mach-E's, Chevy Equinoxes, as many as they can get. They were told in early February, build as many. I'm sure the build plans were stacked, and they're building these things as quickly as possible. And I think April 3rd is going to happen. The real thing is what's going to happen between April 3rd and May 3rd. And you already have countries like India, like Vietnam, like Thailand. They're actually coming in now and say, hey, look, we're going to lower these tariffs. We're going to you have companies starting, they are working with the U.S. It's just a question of, I think there are going to be new tariff barriers and permanent tariff barriers for auto. The question is how high, and if it includes auto parts. The auto parts is where you start seeing destruction of the final assembly work in the U.S., in Detroit, in Ohio, in Kentucky, because those factories are fed out of these USMCA factories in Mexico. And if the parts are 25% more, and if these tariffs stack as they go back and forth over the border, and they stack with steel and aluminum tariffs already as well, I mean, this is where it becomes a real problem. So they're in this analysis phase right now, and they're trying to figure out what it is. Tesla's also, they're in an analysis phase as well, and they're trying to so right now, Tesla, they kind of know what April 3rd looks like for them. No impact. But beyond April 3rd, getting to May 3rd, when it comes to auto parts, Tesla has homework. And I wanted to talk through a little bit of that. This is all, speculation, but if you look at that Windows sticker when you go buy a car and you see the 75-25 or 80-20, and you see parts coming from Mexico, Canada, that's not part number. That's not number of parts. That's actually value of component, percent value of the bill of material, not of the full unit economics, but a percent of that material. So it's low. It's actually for Tesla, it's low dollar materials. This is why when you had that flag chart up, when it said 54% U.S. insourced and 46% are brought in, the value is actually much worse. We're actually importing a lot more value. For Tesla, it's the opposite. Tesla does the high value. They do all the final assembly in their factory in the U.S. They do the motors, inverters, electric motor inverters, battery pack assembly, all local in the U.S. The one that's a little bit of a question is the AI4 computer and where that's assembled. I have some physical pictures of those with country of origin, being in Mexico and Taiwan. I'm sure that feeds different factories in the world. So, but I also think that would be a pretty easy thing actually to move to the U.S. I'm not trying to downplay it. Tesla would have work to do, but if that's true, that could be one that this is where it gets foggy. The Treasury has oversight in terms of what gets included as a USMCA part that can be allowed to be brought over under the USMCA and not be 25% tariffed. And they have auspice in terms of what doesn't. They said in the tariff note, key parts like engines and transmissions, which obviously would correspond with ICE, and you can say electric motors for EVs, those would not get a waiver. This is smart of the US. This is like saying, take the high value items that you're doing in Mexico, and we want those back here because that's going to create the most jobs in the US, but it's also going to be quite destructive in the interim. So for Tesla, I think they have some electrical that's coming in from Asia. So, this is coming, if it's being imported into the US and there is an auto parts tariff, it could fall under that. The AI4 computer, so lower value. And if you start doing some worst case on these things, you're in the low thousands of dollars in terms of tariff value. And Tesla also has time to move some of this stuff. And I'm not sure how much of it's immovable or rocket science. I think, though, when you have an engine or a transmission for GM, you have more of a cost structure and unit economics issue moving it forward versus like, can we physically build an engine in the US? Yeah, we have. But it's more of a would the cost structure actually work? I actually think the cost structure for building the AI4 computer could work just fine in the US. It would be a little bit more expensive, but the printed circuit board assembly, that's all automated. That's the computer chip going down and all the surrounding componentry. And then you've obviously got functional testing. You've got the housing that goes over it, some connectorization, some sealing. It's not cheap, but it's certainly doable, in my opinion, to be done in the U.S. So we're all doing this from the outside. We're not sure. I mean, listen to what Elon is saying. It's a not non-zero impact for Tesla. But I think what you're seeing from the market is look back. Okay, Tesla, you're doing 100% of your assembly here, and you have a very low percentage of parts that you're importing. You're going to be in a pretty good shape. And you still have this TAM. You still have this 16 million unit TAM in the United States. So if a bunch of these GM cars and a bunch of these Ford vehicles and Stellantis vehicles have now become economically not viable, people still have to go buy cars. So it does present an opportunity for Tesla. Let's see how it goes.
Yeah, and for people who are now jumping on this and they're saying, "Oh, Elon, negotiated this with Trump, and this was, planned, and now he wants to kill the auto industry." You got to remember that Tesla built factories in every single continent. They made sure that 95% of their parts is supplied in suppliers in that country.
Elon made these decisions during the Obama timeframe. These are decisions. These are 5 to 7 year decisions.
Yeah, here's Lars saying this is true in all major markets. This has been, a long time. They had known this, and if this was to happen, they protected themselves, and this just so happened, here. So I just want to be clear, this isn't something Elon decided to do.
We've actually heard from Giga Berlin, where there were lots of journalists jumping on the topic that they seem to be in a stage where they are keeping employees, yet they don't build enough cars, which was obviously the transition period from the old Model Y to the new Model Y, but the German press obviously jumped on it. So there were lots and lots of questions about, oh my God, what are you going to do? Are you going to make people redundant? And Tesla in Europe clearly confirmed nobody's going to go redundant. And we're actually building new cars, new models of cars at Giga Berlin. So the whole plan, the whole setup for years has been that in Shanghai, in Berlin, in Austin, and in Fremont, cars are built for their local markets. Of course, there are some parts that have to be imported in different markets. But contrary to so many other car makers who have been very opportunistic in getting cheap labor from certain countries and moved stuff around without thinking about transportation costs because the cheap labor costs justified all that, are now in a dire situation. It has nothing to do with Elon sitting close to Trump. It has all to do about long-term strategy.
I wanted to push it back a little bit, Jeff, on the kind of impact overall. I mean, with these 25% tariffs coming in, at least on some portion of the parts, plus on a decent number of individual models, I would imagine just will not be cost competitive. So I'd imagine they'd either get completely taken off the market, or if you've got a $50,000 vehicle that increases in price by 25%, your TAM is just going to shrink enormously. So that 16 million vehicle U.S. market, I would imagine, shrinks pretty significantly down to 13, maybe less. I don't know exactly how elastic it is, but so I think the overall market is probably smaller, but Tesla's positioning within there would be a lot stronger. Is that a fair assessment of your view also?
Yeah, and it depends where Tesla now puts these newer vehicles. If they start filling out segments that they're not in, so let's say they do a 6 or plus seater, on the Model Y frame, if they do a smaller compact, well, now so first off, I agree with you. There could be some shrinking in the overall TAM, but now if Tesla starts filling out these other segments, it gets really interesting. I give you an example. The ICE and hybrid truck line for Stellantis gets obliterated. The Dodge and Ram trucks, a lot of them are imported. So yeah, there's some, I would say, some fairly significant impact on this. So I think you're going to see automakers go through these phases now. They're doing the analysis. The president was very firm. Like I said, the presser was a little bit confusing. He's just like, if you make your cars here, you're fine. And I thought, okay, well, they're doing what I thought they would do, is just do the finished goods level. Well, they are for April 3rd, but for May 3rd, they do auto parts. That's a big deal.
Maybe that part is negotiable. Maybe that he's going to throw that away. He's just saying it now.
Maybe, but you've got a plan for it right now. I mean, it's literally in the tariff. The tariff he signed.
Or he'll push it off, right? He might say, 1 year
from
now or something.
Yeah, he may. But I mean, as an automaker, you have to actually start planning for it. You have to start planning for it. It's this is, like I said, this is bigger than COVID. This is bigger than, I mean, it's almost kind of, it's a bit unfair because these supply chain decisions and design decisions, these are 3 to 5 year cycle decisions that you make. So it's a very big deal. It's not just pick up and move stuff and just start the machines up in the US. It doesn't work that way.
I think that's why it's so important.
Economics and
that he said it's permanent, right? Because he's trying to send that signal to you need to actually invest here because this is permanent and it's not going away. I think there's justifiably some skepticism that that's the case, right? But that seems very clearly to be the signal he's sending.
And can you imagine the investments into Mexico? You know, so many Asian and European and who wanted to invest or were in the process of investing into Mexico. This is because it's not always just the car plant. It's all the suppliers that come with it that are also moving. Wow.
Yeah. And if we talked about this a year ago, remember when the big scourge was, are all the Chinese going to move into Mexico and shovel cars over the border? And I'm like, there's no way that this is going to be allowed. And it is going to get shut down in greater order. And then remember, we have a tariff already on China for EVs. And it was much higher than this. So I don't think you're going to see too much of a response from China on this specifically. But if it starts impacting their auto parts, which it will, because they have a lot of global suppliers that set up in Mexico, and they have a lot of stuff that they import from China to Mexico. So this is going to impact them as well. This impacts the world like you would not believe. And for everybody by the way, I take criticism in terms of like how this is rolling out. I am fairly critical. I'm okay with the finished goods tariff actually, because I think that is a permanent way that we're going to be doing. But the auto parts tariff, you got to give them a schedule. You got to give them time to redesign, and otherwise they're just not going to be economically viable. So I wonder what these auto CEOs are. I'd love to be a fly on the wall in terms of what they're saying. I just regroup for everybody. Biggest thing since the great financial crisis, in my opinion, for the auto industry, Tesla, Rivian, and they're in a relatively good spot, but they're both going to be impacted. They both source out of Mexico and Canada. So they are going to be impacted. They have time to move components, but they're not going to be zero impacted, but it's going to be containable. Ford, okay, but still in a pretty rough position. But GM, Stellantis, VW, Mazda, Hyundai, Subaru, I would say, Honda and Toyota are going to be relatively okay. They have full models they have to move. They still have to do some more sourcing. But a lot of these European and a lot of the Asian companies that set up final assembly in the U.S., they were kitting outside of the U.S. It's a kitting operation, it's called, where you basically build up and do the value add outside of the U.S., and then you break it down to a level. It's called a semi-breakdown or a complete knockdown. This has happened in the mobile phone industry too. And then you send that breakdown to the U.S., and then you just reassemble in the U.S., package it up, and ship. And that's not a lot of jobs in the U.S. That's not a lot of transformation. That's going to get caught up in this too. That's going to get caught up in the net. And for everybody that questions like, is US being the bullish, so forth, you can take exception with the schedule. I do. But if you look at the relative tariffs and non-tariff barriers that are on from the other countries, it's enormous. I put that chart in there, Herbert. And I'll just give you an example.
Yep.
Did you have it?
I actually do, but I have to send it to myself. Sorry. Keep going.
Oh, no worries. I'll just talk.
Yeah.
If you, just a quick example, I saw Luna from Brazil put a post out, oh, this is terrible. The U.S. is going to cause inflation in auto and so forth. Meanwhile, if you wanted to build a car and ship it if you stack all the tariff and non-tariff barriers, you want to build a car in the U.S. and ship it to Brazil, $20,000 car in the U.S. is going to cost $38,000 in Brazil. So just understand that there's a lot of stuff that's happening like this out there in the world, tariff and non-tariff barriers. Yes, we kind of look like we're bullying. And yes, you can take exception with the schedule. I think there's a better way to do the schedule to be critical. But, this is how you get these jobs here. And these jobs are the jobs that not only you have assembly jobs, but then you have people that can get promoted. They can be supervisors and technicians and shift supervisors and directors and then plant managers. This is how you actually create a ladder, a professional ladder in the U.S. is through these manufacturing jobs. It's different than some of the other service level jobs. I'm not looking down on those, but it's a bit different than us. Why you want manufacturing back here.
I want to just add to your comment for China. I think China was very, very wise to already develop other international markets, Israel, Australia, Europe, where they're BYD setting up a manufacturing plant in Hungary. So I think the immediate impact to China will actually be less than what people expect, just because they have it. But I think this is actually going to bring the European Union and other markets to the conclusion that they have to protect their jobs as well. And so the big loser in the medium to long term could be China. I don't think it's going to be in the short term. I think in the short term, it's much more Mexico, Canada, the South America countries and all that. But I think in the medium to long term, if everybody starts stalling, that's when it's happening. Okay, that's a great chart. Yes.
Yeah, these are the tariff and non-tariff barriers. So the dark blue bar are the tariff rates at these G20 countries. These are just the G20 countries, by the way, too. This isn't everything. And then the non-tariff barriers are the light blue bar, and then the United States is at the bottom. You see the relative difference. So these non-tariff barriers are the VAT taxes. They are there's import duties, there's knockdown duties, there's all different duty types that they put on their products. You look at Brazil, kind of a third of the way down. Again, they're kind of flapping the gums this morning about, what's this going to do. But then look at the tariffs that they have. I mean, they're ridiculous. I've set up manufacturing there too. You can't, you don't have a mobile phone. You have a smartphone business unless you set up manufacturing in Brazil, and BYD set up there for auto manufacturing. So they set up these barriers. They're doing protectionist things to drive, labor content in their country. That's great. But this is how you had this hollowing out in the United States because we haven't been doing it.
But at 25%, we'd be going straight to the high end of that chart just on the tariffs, not even the non-tariff barriers, right? So there's a case to be made that, it is a bit of economic bullying, right?
Yeah. There's a case, and again, and the schedule as well. And then the fact that you're going to layer auto parts in, So we'll see. I think you're going to see some jockeying.
You were just explaining about, these companies preparing everything and just doing the final assembly here. So if you don't include parts, you're actually encouraging that. So if really you want to get to the bottom of it, you have to include parts.
Yes. Yeah. Yeah. But agree. Right? But do parts on a schedule. Do it on a schedule.
On a schedule, because you can't kill them before they build factories here, which will take years.
Well, remember, it was supposed to go into effect on the 2nd of March, and he gave them that month. I'm not saying a month is enough. And I'm sure they will be crazy busy during those 30 days. But it's one of those questions. You just have to wonder, are you straight away very strict, or do you put a schedule in place, but then you have to renegotiate everything all the time? I think he just wanted to cut it down now and then negotiate afterwards, but coming from a strong position. Not saying this is perfect, but I do believe it was just, tough choice to be made, and he just made it.
Yeah, but if the March 3rd component tariffs go on, that's blood rushing in the streets. I don't know how else to say it. There's 3 million employees connected to the U.S. auto industry. They're being fed parts out of Mexico and Canada that were designed as part of the USMCA, and they're importing from abroad. They set up their product designs, their unit economic structure for that import schedule. And now you're telling them that you basically flip the hardware margins upside down on most of the vehicles. Most vehicles cannot take a 25% hit on the finished goods level. And now you're going to levy that as well on the part level as well. And some of these parts go back and forth over the border. So there is some wiggle room in there too. I think they've left it a little bit open of how are they going to treat USMCA parts. So if I'm Elon and I'm Tesla, I take the worst case view right now. Here's what happens in the finished goods level. I'm fine. Got it. I did the hard work over the last 5 to 7 years. Here's what happens at the component level. It's this amount of impact. Say that you have an impact, because you do. And then you figure out how to do further localization here, and they can. They can absolutely do it. But it's going to take time. It's not going to be overnight. Tesla will be impacted if these go on May 3rd. Tesla will be economically impacted, starting May 4th, and it'll be a question of how much can they drive that localization up. I think I covered everything.
Yeah, that was fantastic. So a couple housekeeping points I want to mention before we get to the final third segment when we're talking about Tesla's Q1 and earnings call that's coming and what's going to happen for the rest of the year. First of all, this is the last time we're going to do a live stream. We've been doing live streams at 9 o'clock every Thursday morning. Next week, we're going to start doing it as recorded, and we'll publish that on Friday mornings. So watch out for that. Guys, I think confidently say that this is the best panel on Tesla that we have ever. You've got top level executives. You got Alexandra Mertz here giving you information about what's happening at the shareholder board level. You've got somebody like Jeff Lutz, unparalleled experience at the executive level. You can even see the Tesla team recognizes what he knows. He can really give great advice. He's been calling so many things correctly. He was already talking about a Made in America incentive that he thought that the administration would announce. This is pretty well it here. That's going to impact the auto industry. That's going to impact Tesla. And thank you very much, Jeff. So we've got Matt Smith here as well. He's a financial expert. And I wanted to ask him about what's happening with Q1. So basically, what is it now? The 27th. In about 1 week from now, the 2nd of April, we're going to see Tesla drop their production and delivery numbers. It's going to be bad. We're going to see lots of low, 300, you tell me what numbers, but probably 100,000 less cars than expected. But that is because they shut down the factories to stop producing the Model Y because they've got a new Model Y and they're retooling that. And now at this point, those are getting closer to up to scale. But the last several months, it's been slow. What is your expectation, Matt, on the Q1 production delivery and the earnings call that's going to happen a month from now?
Yeah, so I've been saying for a while now, I think this is going to be worse than people expect in terms of the earnings impact for Q1. I'll leave the expectations on deliveries to people who look at it a little bit more closely. My expectation back in January, when I thought it was not being discussed enough, was that you'd have at least 100,000 units of lost production because of the Model Y changeover on 4 plants. Like that's your most productive or your most profitable vehicle, and it's your highest selling vehicle. And so to take that down 4 plants all at once in 1 quarter, like there's no way that's not going to be a pretty massive hit to your productivity and to your margins. So as I'm thinking about it, kind of going plant by plant, you've got like almost a triple whammy of situations. So you've got lower vehicles. I've modeled between 350 and 370,000 vehicles delivered in Q1. So that that just hurts because it's a lower quantity. But then on top of that, you've got some pretty significant downtime. So that means your margins are going to be a little bit lower because you're not fully utilizing your labor and your depreciation of your equipment and everything like that. You've just got fewer units to amortize those like semi-variable costs over. And then on top of that, with a lot of the old Model Y inventory, you have some pretty significant discounting. Looking at some of the last vehicles to sell, some of the discounts were as high as $8,000 per vehicle. Probably the average is more like, I don't know, $2,000, somewhere in that range. And there were a few in January, good chunk actually, that before the new model was introduced that didn't have a discount. So, but a lot of that's basically 3 pretty big factors weighing down margins in Q1. Now, offsetting that a little bit is going to be, I think you'll see some FSD revenue recognition out of China because they finally shipped that there. You also, I think, are going to have, because Tesla bundled with the launch edition of the Model Y, FSD is essentially included in that price. So you've got like a very premium trim where you're going to have, full FSD purchase price being allocated to the U.S. vehicles at least, and in other markets, I think in Europe they had that for a very brief amount of time. But so you got like a few kind of slight positives, but when I'm putting it all together, I'm coming up with something in the 30 cents ish range for adjusted earnings per share. So I think the last I checked, the analyst consensus was something like 45, 46, something like that. I was in like the low 20s before, but I think when China launched, I went back and revisited some assumptions and assumed, a certain number of people will actually upgrade to FSD there. I think it's going to be smallest. I think it's going to be single-digit percentages, but still, you might have a couple $100 million of kind of pickup from FSD sales in China. Keeping in mind they don't have a subscription offer yet. So any sales of FSD in China are like the big kind of one-time boost to earnings that you get from selling an $8,800 product there outright. And now they'll be able to recognize almost all the revenue on that. So yeah, putting it all together, I think it's going to be a really weak quarter. Something like 350 to 380,000 units delivered. Like the headlines are going to write themselves. People are going to be like, oh, like Elon destroyed the brand, and like people are boycotting Tesla because of Elon's political actions. Like, no. Like they just took literally the world's best-selling vehicle out of production for the better part of a month or so at many different units, and it's going to take a while to ramp back up. So this was expected, but that doesn't mean that it won't be misrepresented when that numbers actually do come out next week, and then on the earnings call next month.
Mm-hmm. Good for us to communicate that very well. Appreciate that, because we need to show that the numbers are going to be really low. We don't want anybody to be surprised and not expect it. I don't think they are, though. I'm starting to see more and more.
I do still believe
mm-hmm.
it will be like that for at least 2-3 more quarters. There are going to be so many ramps of cars. This is, that's the year to just sit it out.
Yeah, but I think doing it on Model Y is going to have a much more pronounced impact on the quarterly results than say ramping some new product. So yeah, you're probably right that we'll have a fair bit of kind of ongoing S curves that we need to work through, and even like Model Y is by no means fully ramped at all 4 plants right now either. So like that's going to continue to be an impact. But I think like the vast majority of the hit I think is being taken in Q1, and we'll kind of see how things level out from here.
Yeah, I think it's going to be how they guide and if they talk about the order inflow rate. As soon as if they talk about the order inflow rate and it's aligned, it's doing well, or it's doing better, it's on trend in terms of a growing yearly outlook, and they're executing on the Model Y ramp, I think they'll quickly look past this first quarter. One thing I just wanted to keep in mind for the viewers as well, just watch out in China, because what's happening in the media versus what's happening in reality are two different things. I've been warning about this for a while, about their growing days payable for the major automakers. BYD just reported, and all you saw were the top line results. You saw the top line growth, you saw the EPS growth, you saw the net income growth, but their operating leverage is declining as they're growing in unit volume. So, and it's meaningfully declining. And we don't have a view of their balance sheet inventory. We don't have a view of their channel inventory, and we don't know their days payable. But this trend that's happened over the last 4 years since 2021, where they grow their days payable to suppliers, everybody says, "Well, that's China. No, that's BS. The growth is the problem, and it is significant. It signifies that there's something going on under the surface that's not good. You just saw what NIO did. NIO just did a capital raise, and NIO had their highest loss in a quarter. NIO days payable are over 250 as well. NIO actually collapsed some of their days payable to suppliers. They grew up over 250 as they collapsed their days payable and started paying suppliers. They had their worst loss in the quarter. Imagine that. So just keep an eye on it. I'm not saying the Chinese auto industry is folding overnight, but as they expand globally, and as they even try to expand inside of China, they're under serious pressure, and they don't have a Tesla vehicle to compete with yet under 30,000. So just keep an eye on that. I wouldn't call them very healthy from a balance sheet perspective.
In addition to the $44 billion in debt that was discovered about BYD, the latest news was BYD themselves disclosed that 26% of their net income from 2024 came from direct government subsidies. Thank you, AJ, for pointing this out. If you take a look at this, they reported net income of $5.5 billion. That means that the subsidies, by the way, which was $1.4 billion in direct government subsidies, made up about 26% of their net income. So, yeah.
Tesla has earnings from ZEV credits as well, but that growth is interesting with BYD in terms of government subsidies, and those are the reported government subsidies. Those aren't the unreported ones, which again are these financing terms that must be being extended to suppliers. Suppliers typically make parts and expect payment in 45 to 90 days. That's how it works everywhere in the world. Okay. The fact that it's 270 days in China is not normal.
It's not healthy.
That is, that's not normal. And I've done business. I've done supply chain in China. That is not normal. Yes, there's an offset. Yes, it's greater than US and Western Europe, but it's usually not 4 to 5 times greater than Western Europe and the US in terms of days payable. I know it sounds wonky, but look out for it. If you're not paying your suppliers and you're extending that period of time, your channel inventory is opaque. Just be careful of just looking at top line and an EPS only. That could be a trap.
Okay. Well, again, incredible information from you, Jeff. And of course, Matt, your explanation of Q1. What are you guys thinking about the rest of the second half of this year? We're in June, of course. We talked at the beginning of this show about the Robotaxi launch. That seems to be still very much on track. What is it? Where anybody's comments about second half of this year for Tesla?
So I will say I'm excited. So I've gone through, I don't know, 4 years of basically in my model, keeping FSD take rates kind of flat. Now, Tesla doesn't disclose these, but I've done a lot of kind of analysis of kind of figuring out where they are, and by looking at the disclosures of how much deferred revenue they have outstanding and how much they're expecting to recognize. And so I've got like a pretty decent estimate of where they are in that metric. The thing I'm getting really excited about is I think with the expansion into China of FSD, with Europe potentially being right on the brim or the edge of a cusp of being released. Thank you. Words are not my strong suit. It just stands to reason, and also just how good V13 is, especially on a hardware 4 vehicle. I mean, it is unbelievable, and almost nobody knows about it. So like, as I've been just showing people, they cannot believe how good it is. And so I think maintaining take rates in the single digits is unlikely to last globally. And so as you start modeling out increases in take rate, even not to like crazy levels, but just some amount of maybe 10% subscribers and a couple percent that are buying it outright, it really does have a very large impact on the overall economics of the company. And if you look at what Tesla makes in gross margin per vehicle, it's like a few $1,000s. And if you then say like sell this software component on top of that for $8,000, like the margin potential is very significant. So this is something I think not a lot of people have built out their models to actually be able to sensitize changes in FSD take rate, because Tesla doesn't disclose it. So you have to kind of make some reasonable estimates if you want to build your model out this way. But this is a very, very big deal. And to me, it seems like it would be madness if take rates did not increase somewhat significantly toward the end of this year.
And I want to include, because people obviously always think only about FSD Robotaxi model, but FSD is going to change transportation everywhere, especially in the truck industry. You will have trucks that will go coast to coast without a driver. And that's where the real money is. I mean, I'm not saying that Robotaxi is not the real money, but that is where the biggest change will happen. At the moment, downtimes of trucks are enormous, right? When you won't have those downtimes anymore because you don't have a driver, because the truck can, other than charging, drive 24 hours a day, that's where the whole ecosystem will shift. So yeah, this will all take time. I can only repeat myself ever so often. It's not about next week, next month, next quarter. It's really about the next couple of years.
I want to recommend to people to watch a video that I did with Søren Basher. It's the one that's titled NVIDIA's Moment. When will Tesla have its NVIDIA moment? And if you're a Tesla investor and you're wanting to know when will Tesla stock kind of be forced to skyrocket, to start going up, I asked Søren to tell me when did NVIDIA stock do that? And NVIDIA stock did that once they started to show earnings upon earnings growth. When they said, here's my earnings this quarter, and the next quarter, it kept growing, and it kept growing, and it kept growing. When does that happen for Tesla? It's a lot earlier than you realize. He modeled out that it's mid-next year, mid-2026.
Yeah, mid-2026. Yeah. We actually said that, remember, at the last Tesla takeover?
Yeah. Yeah. So anyways, just great information, good analysis. Appreciate everybody doing this. And this is the show to watch. If you want to know things, a lot of things people said here actually do end up happening. And it's high level information you won't get anywhere else. So again, next week, we're not doing the live stream on Thursday mornings anymore. We're doing it on Fridays. And the only reason why, by the way, we love doing live streams. Every single one of us here prefer live streams. But
the only reason
YouTube-
is that Jeff is always late. Say it. Say it. Say
Jeff
it.
is always late. If you're going to do live stream, Jeff, you got to be here on the dot. Okay. But the reason is because YouTube treats live streams differently than recorded, published, edited shows. Live streams get good views at the first day and then they drop it. But anytime it's a good edited published show, they will keep promoting that from weeks on end. So we're moving that. Almost every podcast does recorded, edited shows. And we're going to do that next week. So we're going to drop that on Friday mornings from now on. This is Cyberbulls. Thank you, Alexandra. Thank you, Jeff. Thank you, Matt.
Thank you, Jeff.
The best of the best. Thanks, everybody.
Thank you.
Thanks, Herbert.
Herbert.